Hello, I'm Bernanke from interest.co.nz and welcome to a special economic weather report on what happens when interest rates drop to 0%, brought to you in association with ASB. Now, we've got this unusual situation right now in the United States where their official cash rate is 1%, and it's likely to fall further in the next couple of months. The trouble is with the official cash rate or monetary policy is that it doesn't do much when it gets close to 0%. It's a bit like flogging a dead horse. You just can't get the economy to move when you cut from, let's say, 0.5% to 0.25%. There's just no real juice there. So how do you boost the economy when interest rates are very low and you need to give it a lift? Well, let's look back 10 years or so to what happened in Japan in the early 1990s right through until the early 2000s. In fact, right now they still have this problem. Japan had a deflationary problem after a property bubble burst. Sound familiar? And right now, Japanese interest rates are 0.3%. Interestingly, it's actually up from where it used to be. Japan had an effective interest rate of 0% for a long time. And they had to think about how they tried to boost their economy by doing other things other than cutting interest rates. And they turned to something called quantitative easing. And you'll hear a lot about this in the next few months. And it's something that Federal Reserve Governor Ben Bernanke has talked about a lot in the past. Here's Ben Bernanke. He's the current head of the world's most powerful central bank. He's often called in the markets Helicopter Ben, because back in 2002 he gave a speech in which he talked about how an economy might be boosted by quantitative easing. He referred to the saying that when you fly over the market or an economy with a helicopter, one way to fix the problem is simply to dump cash out the side of the helicopter. So now people in the markets know him as Helicopter Ben, and he's in favour of this quantitative easing. There's various ways you can do it, but one way is to simply go out there into the market and buy bonds. Essentially, you're just handing over cash in exchange for these bonds. It pumps cash into the market, into the economy. And many people believe it's essentially printing money, particularly if it's not what they call sterilized. That's where a reserve bank, let's say, buys bonds, puts cash out there, and then soaks it up through the issue of other instruments. Now, Ben Bernanke earlier this week came out and said he was going to spend $800 billion buying mortgage-backed bonds and various other securities backing consumer debt, credit cards, that sort of thing. And this actually had quite a significant effect in lowering mortgage rates in the United States and seems to be making a difference. Here in New Zealand, the Reserve Bank is doing something similar, although they are sterilising it. So right now, the Reserve Bank is lending, by last count, over a couple of $1 billion to the banks here in exchange for residential mortgage-backed securities, so mortgage-backed bonds. Now, the next day they go out into the market and soak up some of this cash, in fact all of this cash, with Reserve Bank bills. So the money is sterilised in New Zealand. In the States, it's clear that it's not being sterilised. Ben Bernanke, Helicopter Ben as we like to call him from now on, is actually printing money to try and boost the US economy and to avoid a deflationary spiral. That's the worst thing you can have, where prices are falling, people are selling assets, prices fall again, and you get yourself into a real deflationary spiral, the sort of spiral we saw during the Depression. Some interesting implications from this, though. If Helicopter Ben gets out there and dumps too much money on the economy, he could create inflation, and people might start to question the value of the US dollar as its reserve currency. Because it's been amazing, really. In the last couple of months, the US dollar has been very strong, despite all of this money, US dollars, being pumped into the global economy. People just have to have US dollars when they face margin calls, when they need to repatriate money back to the big US banks. So Helicopter Ben is hoping to avoid deflation. We hope that he succeeds, but we do ask the question, when is too much money too much for an economy and to create inflation? I'm Bernanke. That was a special report on Helicopter Ben and dumping money on the economy, brought to you in association with ASB.